Yeah! Malaysia has gotten 5 digital banking license! Woohoo! What does that really mean? Hi, I'm Frankie. Welcome back to my fuck show. All of us waited too damn long for this good news. And on the 29th of April, Bank Negara announced the 5 successful applicants for the digital banking license comprising these companies. And today, I want to talk about what digital banking is really about and how is it going to disrupt the traditional banking system. First of all, what is a digital bank? To help you understand this better, it's easier to recap what a traditional bank is, since most of us know what they are. A bank is where you save your money. To be specific, it is a place where you need to print your IC, your birth cert, your payslip, your EPF statement, anything and everything so that you can start filling this stick of documents to start saving. Not to mention traveling all the way to the bank and getting a queue number that never starts with number 1. The process is the same when you try to borrow money from a bank. And since borrowing money means taking money out of the bank, chances are you need to wait centuries long before you get the money, because the bank needs to go through layers of approval before it is convinced that you can and you will repay the money. Now that you are reminded of those painful banking experiences, a digital bank is a bank without all those painful red tapes. Imagine carrying a bank right in your pocket. Some more, no need to hold that bulky, smelly wallet with heavy ceilings dragging down your pants. Don't even need to apply for debit card. Just use your phone to scan the Do It Now QR code can already. Then you'll be asking, that sounds pretty much like the e-wallet that we are currently using. We already have so many different kind of e-wallets in town. How is it different from a digital bank? Everyone asks why I left my banking job. To be honest, it's because I don't want to dress like a clown just to look professional. Malaysia's so hot. I cannot tahan. That's why I decided to become an entrepreneur, so that I can wear this every day. Just look at it. Its ultra breathable material doesn't trap heat by allowing airflow. It's so airy. On top of that, because of the dynamic flex technology in its stretchable waist, I'm allowed more mobility when I wear their pants. Now I can squat down without worrying about tearing anything. Then on the days when I have to meet clients and look smart, I have the option wearing their long pants too. But I usually wear shorts in the office. I also don't have to worry about soggy pants because their moisture-wicking material helps remove and dry sweat from my skin rapidly. But the best thing about bottom-slap pants is that it is abrasion resistant, which means it is able to withstand wear and tear. Don't have to keep buying new pants. Save money way. If you guys want to get your hands, or should I say legs, in these pants, check out the link in the description for a 10% discount. Bottom slap, you rock. First of all, the name itself is already different. One is called a wallet and the other one is called a bank. By definition, a bank is the only legal entity that can take deposits from the public and use those funds to generate a profit. It is this very important feature that you could ask your employer to bank your salary in your bank account, or you can save your extra money into the bank and receive a return in the form of interest. A wallet cannot do that. They simply store your money in the trust account and provide that convenience for you to scan those QR codes to make financial transactions. Here comes the interesting part. Nothing is free in the world. From an e-wallet operator perspective, helping you to make that transaction when you scan the QR code incur costs for them. At the same time, they are unable to use the money in your wallet to churn profits like a bank. Well, safe to say that most of them actually lose money. So why are there so many people desperately wanting to be in this unrewarding business? The saying goes, data is the new gold. If a company controls enough data, it can change the world. That's exactly the business of Palantir in the US, which I've made a video talking about before. Check it out here if you want to know more about them. It knows your purchasing power and spending habit, and from there, it is capable of conducting super effective marketing gimmicks to make you a sucker for them.
I'm a sucker for you.
In a traditional banking setup, although they also possess similar data, they might not be as comprehensive as the e-wallet operator, because you might have 3 to 4 bank accounts which you use for different purposes. But you will always use your favorite e-wallet for spending to collect points or cashbacks. Because of that nature, it didn't make much sense for traditional banks to compile and analyze that data in the first place. They rather focus on lending more money to people who could actually pay back with interest. A digital bank combines the best of both worlds with speed and lower cost. Moreover, they operate in the cloud and use next-gen technologies like artificial intelligence, machine learning, and data analytics to create hyper-personalized, customer-centric products and services that directly meet the needs of their customers. Ultimately, digital banks make banking easier. It's faster and more convenient. For example, you can set up an account in just a few minutes on your phone, and the account servicing fees are generally significantly lower than those of traditional banks. On a broader perspective, digital banking will also help to improve financial inclusion in Malaysia, with consumers that are currently left unbanked or underserved by traditional banks much more likely to be able to access products provided by digital banks. If digital banking is so wonderful, should investors start selling their traditional banking stocks now and wait for digital banks to go IPO to invest in them? Well, to be fair, we got confused with the concept of digital banking because we are kind of using a lot of digitized services provided by banks already. And that means our traditional banks are already making good progress in their digital transformation strategies. From there, all they have to do is to put in the work selecting the right technologies and understand what their customers really want and need to stay relevant in the business. Some analysts are arguing that digital banks are not a major threat to conventional counterparts. In my opinion, a simple incentive to entice people to use digital bank to receive their salaries and seeing the interest income ticks on a real-time basis are good enough tools to start a good fight for deposits. And with the speed that a digital bank could get things done, think about it. A digital bank is constantly learning about your behavior. It knows so damn well that you want that new iPhone. And if you are the kind of person who goes to high tea in 5-star hotels every weekend, it is ready to give you the loan to buy that phone the very moment you inquire for it. On the other hand, many banks call themselves digital when they simply have an e-banking app for customers to perform banking transactions. Most of the time, they are still being processed the traditional way. Consumers today expect to be able to manage all aspects of their life with a few clicks and swipes on their phones, including their finances. So banks that are lacking behind will perish in this new era of banking. That's all we have for today. #FUCK.